All right, guys. Hi, and welcome back to today's program. In today's program, we're going to talk about Elon Musk, who needs no introduction, Barbara Corcoran from Shark Tank, and a bunch of other Wall Street insiders who are divided on what's going to happen with the housing market. Surprise, surprise. And then we're going to talk about why this is such a sham and that how nobody can predict what's going to happen in the housing market except for the people that are pulling the levers, injecting money into the economy, lowering and raising interest rates, and how they are front-running the American public to the tune of trillions of dollars. So let's get into this article from Business Insider India. It says, Wall Street is divided on the outlook of the U.S. home prices. Here's what 6 experts have recently said. So first and foremost, I'm going to talk about our favorite prankster, Elon Musk, the guy that no one can really figure out. Is he for the American people? Is he for free speech? As he takes someone from the World Economic Forum and puts them at the helm of Twitter, but also at the same time talks about free speech, but then wants to implant a computer chip into your brain. So Elon Musk says this will accelerate as high interest rates make homes less affordable, Elon said in a response to a chart showing falling global home prices. The billionaire continues to make grim warnings about the U.S. housing market and recently said home values are set to plunge. Now, obviously, Elon is an insider. He does a lot of business with the government. The government has heavily subsidized his businesses to bring electric car manufacturing into full steam, all while Elon challenges power and tells the World Economic Forum that globalism might not be the best idea because if one civilization collapses, at least another might continue to stand and offer their people prosperity, and warns against putting all our fates into one boat and entrusting one global organization to oversee it all is a big problem. So as many people I talk to, it's hard to get a read on Elon and where he stands. And I think he is that chameleon, and he is probably ready to be an opportunist no matter what the situation is. But for now, I will give Elon Musk the benefit of the doubt that he is on the right side of history and trying to help the American people and the world and help them have more freedom of actions and of free speech. So next we have a statement from Barbara Corcoran of Shark Tank fame and also owns a ton of real estate in New York and probably around the rest of the country. And the article goes on to say that Shark Tank investor blushed off Musk's dramatic warning and said he's wrong. She argued that there's a load of pent-up demand and predicts that home prices will surge 20% once interest rates fall by 2 percentage points. Does she know something we don't know? Well, I promise you, she definitely has more influence and is more connected than we are. So maybe she does, but maybe she doesn't. So next we have a statement from Goldman Sachs. Goldman Sachs Strategies reveals their forecast for home prices and now predict a smaller decline this year, 2.2% decline in 2023, down from their previous projection of 6.1%. Now, as I mentioned in previous videos, Jamie Dimon is well connected. He's just taken over a 10% share of the banking industry overall as banks have collapsed. And Jamie Dimon has been there to sweep them up, to take the profits and socialize the losses via your friends at the federal government who made that possible, even though it is technically against the law. At least that's my understanding. So they go on to say the tug of war between poor affordability and tight inventory will continue. And that's right. Some people don't want to sell their homes because they have low interest rates. So even if they were making a lateral move, the cost of their home would be about double what they paid for it 2 years ago. So they're going to hang on. And on the flip side of the coin, you have buyers going, can I afford to pay for my home while everything around me is going up drastically, including HOA dues, including taxes and insurance? And as ESG mandates are being pushed, I got an email today from NV Energy, and they were talking about how I could buy carbon credits to offset my usage here in my home while the globe-trotting elite fly around in their private jets discussing how you should have to pay for carbon credits. The article goes on to say the tug of war between poor affordability and tight inventory will continue. Strategies wrote in Monday's note, while we are cognizant of the tailwinds from the tight housing supply, we expect affordability will likely stay poor, ultimately pushing home prices lower in 2023. Again, these people are very, very connected, so they have an insight that we don't if interest rates are going to continue to go up, which will drive down home affordability. So the next Wall Street insider that the article quotes is Jeff Green. The article says the real estate billionaire noted that the housing market has shifted from a state of panicked buying and desperate bidding to paralysis as rates have climbed. People can't qualify for mortgages anymore, he said, adding that sellers will consider price cuts after receiving zero offers, while buyers will resist paying much higher mortgage rates. And I've mentioned in other videos, it's like an Etch-a-Sketch. They drop interest rates, they raise interest rates, they flood money into the economy, and basically they make knowing the future completely impossible for all but the ones that are pulling the levers, and for those that are very well connected, giving them ability to be poised to take quick action whichever way the market turns. Jeff Green goes on to say many people will eventually have to sell their homes for less than they'd like. Unless rates fall soon, that's likely to pull down home prices, he said. Next, we have CoreLogic's chief economist Salma Hepp said that although volatility in mortgage rates is making homebuyers more hesitant to purchase homes, the lack of homes for sale is putting upward pressure on prices. Is that true? In Las Vegas, we've come down approximately 8.8% from last year. And as we know, June is typically the height of home prices for the year. And we are quickly passing June. And my prediction, if nothing changes, even with the Federal Reserve's interest rate pause, that home prices are going to continue to come down rapidly over the fall, the holidays, and into early next year. But she's forecasting a rebound in home prices, but added that the combination of high mortgage rates and inflation means any rise in home prices will return to average seasonal gains by the end of the year, according to the report. She goes on to say that the recent trends indicate that home prices will grow 5% by next April, in line with the historical yearly average. Wow. I mean, what a statement, like as if anything is normal after COVID and after the lockdowns and after the money printing and after the whipsaw effects that interest rates are having on the American people's psyche, their ability to afford homes and their ability to judge whether they will have enough in savings and income and to live a decent quality of lifestyle, even if they are very hardworking and diligent with their finances. Okay, so lastly, we have Wharton professor Jeremy Siegel said U.S. home prices could slide as the recent gains and higher borrowing costs will deter prospective home buyers. He goes on to say the higher interest rates and 40% increase in home prices more than doubled the cost for home buyers, he wrote in his weekly commentary. Mortgage rates have ticked down to 6% a few months ago before rising back to 7% now. So perhaps we see some renewed softness in housing prices. So that's it. Even Wall Street insiders, the people with the best information on the planet, don't know where home prices are going. So it kind of infuriates me when I see YouTubers, and I'm guilty of this myself, predict what is going to happen with home prices, because it is completely impossible, no matter how much data we have, to know what's going to happen, because there are people behind the curtains pulling the levers that will determine the fate of home prices and the future of the American people's quality of life. And it frankly disgusts me that they still call the United States a democracy, because I know I didn't personally vote for this. And if you didn't vote for it either, give me a like right now on this video and type 1 in the comments if you're one of the many people that I speak to that would never give another group of people the authority over you to front run the economy, so they always know if home prices are going up or down, and they can get in line before you to make the proper decision to make themselves extremely wealthy, while you and your family continue to walk on eggshells, not knowing if you're going to fall through the surface into a deep abyss that you'll never be able to climb out from. So guys, here's what I'm talking about. It's the Federal Reserve. So as many of you probably already know, the Federal Reserve skips June rate hikes, but leaves the door open to future increases. So as we know, they've raised rates about 13 times over the past year, which no one could predict other than themselves. This puts you and me and the average American at great peril when we don't know what the financial future holds. And as we can see in this picture, Jerome Powell, who stands in front of all these American flags to persuade you that he has your best interests at heart. But I absolutely think this picture is quite a bit more accurate. These are men that are worth fortunes. Jerome Powell himself is said to be worth $50 million by some online accounts. And as we know, that's probably not even accurate. He's probably worth considerably more than that. So these men control the money supply. They control the interest rates. As many of you know, in the stock market, there are huge Wall Street firms that front run the trades that you're making on your Ameritrade, on your E-Trade, and on your other online gambling platforms. So you make a trade, they see the trading volume coming in from millions of people and position themselves in front of you, because when the stock goes up due to that volume, they have already purchased it before you and then can make a quick exit, stealing your wealth along with the American people. So in this picture, you have Alan Greenspan, I believe that's Ben Bernanke, and other unknown Federal Reserve tycoon getting grotesquely wealthy off of your labor and mine, while bilking the American public for trillions of dollars and putting you, me, and our children on the hook to pay the bill. And guys, so even though we saw unprecedented money printing during the corona sickness and have never seen anything like that, this is the lever of power. It's interest rates. It's how costly it will be to borrow money. So as we can see in the chart, in the 80s, we had a Paul Volcker moment when inflation was running rampant. They spiked interest rates to approximately 18% and slowed down the economy and got things back in line. Right here, before interest rates spiked, you not think the insiders knew and sold all their real estate? And do you not think that right here, after that happened, when rates were going to drop rapidly, do you not think those same insiders came back in that bought everything in sight, including stocks and real estate? Your single family home, having an American family or an American homeowner living in that home. And now we come to pre-coronavirus sickness. While the powers that be were bringing interest rates up, home prices at that time started to stall. Homes were sitting on the market and prices started to decline. So in turn, before you and I knew, they made the decision to plummet interest rates down to zero again. And again, do you think they're not in positions to make fortunes off of the information that they have control over? Why you and I sit here and guess whether home prices are going to go up or down. And again, as I mentioned, an unprecedented amount of currency was injected into the economy at that time, which devalues the dollar, which is also going to be inflationary, which the Federal Reserve absolutely denied. They said it was probably going to be transitory, which is an obvious miscalculation and judgment when we now look at affordability and home prices and everyday goods and services that you need to survive and live a decent quality of life. So now we have a situation where home prices have gone up at one of the most drastic paces in history, and people are out there debating whether home prices are going to go up or down. And I make the case that is absolutely unknowable by anybody other than the people that control the money supply and the interest rates. Because I can tell you every stat, every home that's sold, time on market, the months of inventory. If your particular neighborhood has had a 3% drop in value or 8%, I know all those statistics. But what I do not know is the rate of interest that money will be available in the future. So I ask you, what do you think? Is this what you voted for? Are we still in a democracy? Or was it ever a democracy? So you tell me in the comments, type 1 if we're in a democracy, and type 2 if you don't think we were ever in a democracy. All right, guys, that's it. Short video today. Like, subscribe, comment in this channel. We need to hear your voice. You need to speak up now. If there is ever going to be change, this is the time. It is time to speak up. So let me hear you in the comments, and then I will see you on the next video. Bye for now. This is Ken Blumberg, your all-American realtor, signing off for now.